My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, I'm just trying to make a little money. My job, not just to entertain, but to educate, teach, put in context. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. We keep being told that this market could unravel at any minute. That includes the doomsday scenario about how the charts look so similar to the market's trajectory in 2008 and 2001. Never mind that those years were terrible because we got hit with some big curveballs in the fall. We've also been dealing with the comeuppance for big cap tech that seems to happen almost every day. And, of course, on the eve of the biggest non-ski trip to Wyoming in history, we are on tenterhooks betting that Fed Chief Jay Powell keeps the wheels in spin. But, man, the market sure didn't seem to take any of that seriously today. Dow gaining 13 points, S&P climbing 1.41%, and then NASDAQ jumping 1.67%. Buy, buy, buy! Buy, buy, buy!
House of pleasure.
I think the widespread sense of doom and gloom is scaring you away from potentially very good opportunities that I see every day. Remember how I close the show. There's always a bull market somewhere, and it's my job to find it for you. I first heard that bull market mantra when I was working at Goldman Sachs. One of my partners insisted I always have something to say to help our wealthy clients or potential clients. I mean, there's always a bull market somewhere is the progeny of smart business people trying to do more business and not sitting on their hands, feeling gloomy with nothing to say, or, if worse, saying negative things, which happens to be the way I think most people in our business think about it. Now, there have been times, including 2008, where there really wasn't a bull market. I mean, maybe a couple of calf markets at best. I always thought myself as kind of a matador on the wrong side of the story for certain. But listen to me, people. If you take one thing away from this and what we've been saying all week, this is not 2008. Right now, I think we've actually got just a plethora of bull markets. I was just thinking about them all day. I just said, well, I got to have some stuff that you got to be ready to buy into the weakness that is often self-fulfilling and created by negative thinkers. Just in case we really are on the eve of destruction, another Fed-mandated meltdown could create some tremendous opportunities, but only if you know where to look and if you're ready for them when the market's in free fall. These will hold until true inflation comes down in wages, rents, and food, the trio of intractables. First, I'm calling whatever the heck is happening in the world of agriculture a bull market of insane proportions. Now, it's not hard to see this one. Last Friday, Deere reported, okay? And the farm equipment and equipment maker, they do a lot of industrial stuff, too. I shouldn't say that. Sounded pretty middling about its future. When I read it, I said, geez, these guys are pretty downbeat. Of course, when I heard the actual numbers, though, I was stunned at how well John Deere is doing. Deere had an amazing quarter, and I had total faith that next year is going to be super for them. I've always liked the ag space because people have to eat, but there are times when farmers are over-planning and the group does poorly. This is not one of those times, which is why Deere could rally on its so-called poor quarter and why it's got more price target boosting response than any other company I can remember this earnings season. I got even more convinced about the ag bull market after speaking with Scott Wine, the affable, albeit tough CEO of CNH Industrial. That's an amalgam of Case and New Holland, venerable names in the farm equipment biz. I happen to like the forlorn Agco, too. And as a longtime proponent of Tractor Supply, I know that they have the game wired and offer terrific prices in the very underpenetrated feed and grain markets. But increasingly, I find myself drawn to the FERTs, Wall Street's name for fertilizers, namely Mosaic, CF, and Nutrient, all of which trade at mid-single-digit price-earnings multiples here, as the group has reportedly broken the hearts of investors who stayed too long. Now, anyone who's followed the group knows that when the grain complex peaked not that long ago, the fertilizer stocks did roll over. Now, though, we have horrible droughts throughout the northern hemisphere, and that means corn yields will most likely disappoint. Ukraine, which accounts for 13% of the world's calories, is operating basically at half-mast. And what can I say? Talk about visibility into 2023. Let me throw in the seed companies, too. Most visibly, Corteva, a company I talked to, with improving fundamentals that might be able to put through a price increase, maybe even two, not in the not-too-distant future. One of the rare outfits that still has tremendous pricing power in a world where people are very worried about pricing power at all. Second bull market, well, one of my long-term favorites is auto parts. Yeah, longtime Cramer fave AutoZone remains the king. And I can tell you, as the owner of a 16-year-old car, the zone is the best place to get what you need. Let me put AutoZone in perspective. Last night, we heard from Salesforce announcing its $10 billion buyback, and we instantly huddled over the impact. That's huge, right? I got to tell you, it's nothing next to AutoZone. This company had 30 million shares in 2016. Now it has less than 20 million shares. During this period, the market capitalization has grown from 21 billion to 43 billion. Now, there's also Advanced Auto Parts, but it missed last time out. I want to get into the zone. Keep it simple. Third, it's hard to tell because of the endless series of mishaps from Boeing. But there's a bull market in aerospace and defense, too. The Russian invasion of Ukraine has caused the West to get serious about armaments again. And when you think about armaments and aircraft, that means you should be thinking about Raytheon. Here's a stock that seems almost chronically undervalued. It's up 12% for the year. It's pretty good versus the averages, but not so hot compared to the strength of its end markets. Here's how you have to think about Raytheon. Right now, the United States has only given Ukraine $13 billion in security aid. I think this is a travesty. But if our government believes Russia's run by lunatics who will launch nukes if we escalate the situation too aggressively, then we're stuck with that low level of involvement. In that case, there are really two ways the war could play out. Either Germany and France decide to sue for peace once it gets colder, and Russia decides to put the squeeze on their desperately needed natural gas supplies, or the U.S. government decides, switches its purview, and says, you know what? We're going to treat this like a full-blown proxy war and defeat the Russians, the same way Reagan beat the Soviet Union in Afghanistan and then subsequently with the wall falling. We'll need more big weapons in either scenario, and that's Raytheon. I would have emphasized Lockheed Martin, too, but it's already up 23% the year. I'm betting Raytheon can play catch-up. Finally, there could be a long-term bull market coming out of the inaptly named Inflation Reduction Act, because there are huge climate subsidies in there. In fact, there are parts of the legislation focused on making the electric grid more climate sensitive, and they read like they were written by Generac, a company we just heard from. Generac produce products can store solar power and help you sell your energy back to the grid while also charging your electric vehicle. I think California's new mandate that new cars will have to be fully electric by 2035 will also give Generac a huge boost. I know that the bill favors plug power for hydrogen vehicles, and it lowers the price so the company's truly viable here. And I'm intrigued about what the law may mean for Darley Ingredients, the ultimate recycler of all sorts of waste. After speaking with them, I believe they have a bright future, too. So the bottom line, there's always a bull market somewhere, and right now they're in agriculture, auto parts, aerospace, defense, alternative energy. Four big bull markets in a tape that refuses to stay down, even though almost every hedge fund manager seems to think that the averages are about to tank any day now. Keith in Wisconsin, Keith.
Booyah, Dr. Cramer. Thank you for taking my call today.
Of course,
I'm a long-time watcher and second-time caller. And for the investment club with the morning meeting. You kept me invested through this turbulent market and gave me an invaluable education that helped me high-grade my portfolio. I really appreciate that.
Thank you. Thank you so much. Man, that makes a world of difference to hear things like that, because the investing club is a labor of love, but it needs to be a labor of money. Let's get working together. What's up?
I know that you're a big fan of Morgan Stanley. Morgan Stanley is in the trust, and I'm looking for some exposure to the financial market. But one of the first guests you had at your new set was Larry Fink at BlackRock, and I have always been impressed with him when he has been on CNBC. What do you think of BlackRock as compared to Morgan Stanley? Thank you, Jim.
Bye. I wish I could own both. Thank you for those incredibly kind words. The investing club is meant for people like you, Keith. We have Morgan Stanley. We like the yield. It's a little bit higher. James Gorman's doing a magnificent job at Morgan Stanley, but I have to tell you, you're absolutely right. Larry Fink's doing a fantastic job at BlackRock. They may be 6 or 8 dozen. Those are both great companies. How about we go to Jack in Maryland? Jack.
Booyah, Captain Cramer.
Booyah. What's up?
It's a pleasure to talk to another seafaring man.
Oh.
Bring a subset of your crew down, and we'll put the sea on the Chesapeake.
My crew, what I say to my crew is, beat me.
Well, I'm an engineering physicist at the university, which gives me a little insight into technology. And one company that's in my portfolio that I'd like you to comment on is the old spin-off from Moat, MSI.
I have felt, and thank you for those kind words, Jack, that I have missed the boat on this stock so many times. It is so good. Motorola Solutions is so well run. Here's what we're going to do. We're going to invite Greg Brown, the CEO of Motorola Solutions, to be on next week. That's a game changer. Thank you, Jack. Okay, there's a lot of positivity in agriculture, auto parts, aerospace, and defense, and alternative. We look at the graphics here. Hey, don't you love them? Come on, let's celebrate the downtown set for a few seconds. There's always a bull market somewhere. Don't let the widespread sense of doom and gloom just scare you out of stocks. On Man Money tonight, Workday report after the bell, and it's stunning. That is part 2 of our fantasy football lineup. So which players and stocks make the cut for everything from tight end to kicker? I'm going to reveal my pick. And Williams-Sonoma reported a quarter that pleased Wall Street. I'm finding out what's behind the strength of the company's top brass. It's not too late there, and stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.